Hey, what's up, everybody? I've been getting I put the ADX on a lot of my charts, and I was getting a lot of people asking me, what is the ADX? How's it work? All that kind of stuff. So I thought I'd put a quick video here, kind of trying to explain the ADX, which is the average directional index. Um, just do a quick video and kind of explain it. So hopefully this goes well, and give me some feedback if it doesn't, and if it's good or bad, let me know. Um, I'm just going to use this Bitcoin chart I just put together here real quick. It's just a daily chart, so every candle on here is just the daily, and it's Bitcoin versus the dollar. The dotted lines I have on the price chart itself are just trend lines, and I'll explain why I got those in a minute. I got some vertical lines that I'm going to show you some reasons on why to look at the ADX. But the ADX itself, the average directional index, is this black line that's plotted underneath the price chart. And what the ADX does is it measures the strength of trend in the market. So one of the, how strong a trend is. So the first thing to really know about the ADX is if the ADX is increasing like it is right here, um, this black line is increasing, so the ADX is moving to the upside. It does not mean that price is moving, that price should move higher. What it's doing is it's telling you that the momentum for trend strength, or basically the strength of trend, is increasing. So if the trend is bearish, then that's where the momentum's going to be with the bears, or if it's bullish, the momentum's going to be with the bulls. So an increasing ADX just means that the strength in trend is increasing. Does not mean price is going up. So that's a very important thing about this indicator. The other two lines, and what the average, what the ADX is it's a smooth average of the other two lines that are plotted on it. I'm not going to get too much of the math, but what it's doing is it's taking an exponential moving average of the directional index lines for a certain period, and in this case it's 14 days since we're looking at a daily. And the other two lines that are plotted with the ADX line is there's a green line and a red line. The green line is the positive directional index. So some people will say, the positive DI. You'll probably hear that a lot, as it says right here on the chart. The red is the negative directional index, or the minus DI. Now, what those lines are calculating is, they're, over the 14-day period, they're taking two consecutive lows, and they're taking the rate of change against the highs. If you want to look the formula up, you can. I'm not going to get into too much of the math of it, but what it's doing is it's measuring that rate of change distance between the consecutive lows against the highs. And I guess in theory is if the rate of change is widening, then strength is getting stronger, or if it's tightening, strength is getting less. So then the ADX is kind of smoothing out the rate of change of those directional index lines. So that's basically what these lines represent. If the now in this example right here, as I'm circling, we can look at this first vertical line here. The ADX is increasing, and the red negative directional index is also increasing. So if the ADX is increasing and the red minus DI is increasing, the bears are in control of trend. So you're getting the strength in trend for the bears, and as you can see, we're in a downtrend in the price market. One other thing I did here, just to kind of use it as an example, and I usually don't have these colors on here, but I have a blue range, a green range, and a red range. The blue range is I got marked from 0 to 20. And anytime the ADX is underneath, within the 0 to 20 range. So, the ADX is low here, the ADX is low here, the ADX is low here. Those are going to be times when there's not a lot of strength for trend for either direction. So, and if you look up in the price chart, you got a lot of consolidation when it's low. You got a lot of consolidation when it's low. Right here it's low, a lot of consolidation. And then over here you had a little bit of consolidation here. So that first level is really just a weak trend. So there's not a lot of strength for either the bulls or the bears when the ADX is under, when the black line, the ADX, is in the blue zone. And this is just a general guideline when I say 0 to 20. What I like to do is I actually like to look where the ADX has been in the past, and I like to measure where some of the changes in the market has been, where some of the changes in the ADX happen. So, and then you find that you find that horizontal line. It could be 25, it could be 23. It just depends on whatever market you're looking at. But for example purposes, I'm looking at 0 to 20 as your weak trend. Now the next level is the green level, and I have it from 20 to 30. Now when the ADX is increasing in the green zone, this is your strength building zone. This is where you get a lot of in this case, with the market being with the bears, you're getting a lot of buying interest. So one of the things that I look for is when the ADX is increasing, coming out of the blue range and into the green zone. That's why I have this vertical line on here. This is where you're starting to get buying interest in the market because the bears are in control here. And at this time, that's right when a trend line broke right here to the downside, and as you can see, it kind of tested there a little bit and then broke to the downside as that selling pressure was built up in the market there. So anytime the ADX is in the green zone, that means that the momentum for whatever trend is in play is that's where the strength is. Now, if you go into the 30 to the 40 zone, or the 40 to 60 zone, that's the red zone, and yes, it's the ADX is moving up into what I call exhaustion zone. It's sort of like if you take a baseball and just whip it up into the air really quick. It's going to go really, really fast, and then it's going to kind of come up and then kind of stall out and come down. So you still have momentum for the trend, but it's giving you a warning signal that it could start to stall out. So what happened here is the ADX kind of dropped back out of the red and into the green. So even though it's still in the zone for strength, what has happened is the red negative directional index is coming tangled up with the green, so it's really hard to tell a direction here, and the ADX is starting to drop. So what this is telling you is that the bearish trend is coming into a stall, and of course it went sideways here for a little bit. So if we jump back into the next one where I have this vertical line, you can see there's a little bit of a trend break right here, and then the market came back, retested it as support. So this trend line was resistance and had a little bit of a support flip. But this went from a really kind of sideways. It tried to get a little bit of bullishness. As you can see right here, the ADX kicked up for the bulls because the green positive directional index was going higher, but quickly stalled, and then we were back down low again to where it went sideways, and then as you can see, a little bit more consolidation, but it remained on the break because if you draw a horizontal here, it stayed level to where it kept the bullishness going, even though it went into weakness. And then we went into this next phase where it broke into a new high. So you can just move this up to here, looking at previous high, broke to the upside. So what was happening is the ADX here was going from the blue zone into the green zone, so exiting the weak stage and starting to build trend, and then the positive directional index was moving higher because price was moving higher, and the formula here was saying, hey, there's some buying interest coming into the market, and then that's when it kicked higher, and then we got into this bullish trend. So as you can see, the ADX remained kind of elevated in here. So these are times when it could start to stall out, and you can see a little bit of a drop, but what you want to watch for, even though it's dropping and it's staying in this zone, you want to make sure who's controlling the trend even on these drops in the ADX. So right here, the green positive directional index dropped, but at the same time, the red was dropping, so it never crossed. So when this market came back down, it fell into a support level to keep the bulls in control. So that's actually kind of a supportive buying signal. Again, I wouldn't trade just off this indicator. I use this as a validator. It's not so much a trade indicator. It's definitely a validator because it is using moving averages, which is lagged, and you don't really want to trade off of this. But it's definitely good to use it as a tool for validating other stuff that you're looking at. But maybe you're looking at an RSI overbought, oversold, or see what kind of bullish or bearish zone you're in, or anything like that, or whatever you're using. Use this as a validator for trend. So as you can see, it kicked up, moved up, and then it got to this point where it was coming back down, testing the trend line, and then kind of came down and then kind of broke to the upside here again. And as you can see, the green positive directional index came up and it got tangled in here again as the ADX came down. But at this point right here, this is a tough call. But once you have this trend line here, the price is testing the trend line, and the ADX is starting to increase right here. So it's really the increase of the bulls here as the trend line broke, or this little trend line right here broke to the upside. So the ADX is increasing, which is increased for strength and trend, and then the bulls are back in control, and then you got another run to the upside, and then another one here. We had a little bit of a support resistance flip where the market broke to the downside here on this trend line, which was support, where the buyers were holding that line for a little bit, broke here, and then the sellers held that line. And the interesting thing that happened right here is the ADX dropped, and now it dropped back into the blue zone, and then ever since then it's been trying to get up into the green zone a little bit, but it's really kind of failing as the you're getting whipsaws here. You're getting a little bit of up, a little bit of down, but the momentum for trend is not going anywhere. So some of the other videos I've had out here, I've talked about this trend line that we're in right now. Since we haven't made new highs, I'm not really excited yet. This last time the market didn't even make a high to touch the trend line. So right there's a bearish signal. But then again, when you look at the ADX line, it's dropping and it's staying down in the blue zone, which is a weak trend, and there's really not a big strong sense of direction either. So as long as this ADX is staying underneath the green and in the blue, we can see a little bit more consolidation, and maybe we work toward the apex of this pattern from the previous low of 9100, and whatever this trend line is at the moment. If it goes straight up, you're probably right around 11.2. So that range, as we move to the apex here, is going to most likely be the case, unless we start to see some movement up toward the trend line to get the ADX to start to kick up higher as price moves up, to give this thing some movement. But right now it's just showing sideways. So those are the three kind of zones. Just for a quick guidance, is 0 to 20 is weak, 20 to 30 is your strength building zone, and then 40 to 60 is your exhaustion phase. So the ADX to me is like the heartbeat of the market. It's kind of like, I use the analogy of a doctor looking at an EKG. If they looked at my heartbeat and I looked at it over time, if something's going weird with my heartbeat, then you know that something's up, and you want to dig a little deeper to figure out what's happening with your heart. This is the same kind of thing to me. This is kind of the heartbeat of momentum and trend, which is the market to me, because TA is all about trends. So I want to know where the trend is headed. And if there's something weird going on, like a switch from a weak zone into the green zone, at the same time it's breaking a trend line, when that happens, that helps validate that the break in that trend line is pretty strong, and there should be buying interest coming into the market. And of course you're going to have other indicators that help you determine if that trend line is going to break or not. But if those are starting to validate that it's going to break, and then you see the ADX line kicking up higher, there you go. You got another validator to help you be comfortable in a buying position. So I know I'm talking fast, and I just don't want the video to be super long. But if you have any questions or comments about the average directional index, and the positive and the negative DI, and how to apply those against an RSI or anything like that, feel free to reach out to me on FiboSwanny out on Twitter. Just feel free to flip out questions, and if I have time, I'll definitely answer them for you. So, but this is the ADX. So Quick takeaway, if the ADX is increasing, it does not mean price is increasing. It just means the strength and trend is increasing. Then you have to determine what that trend is by using the positive DI and the negative DI. And then wherever the ADX is leveled at and in what direction it is, look at the zones of where it's at and how it's acting against price and other indicators, and it should work out for you pretty well, as you test it on your stuff. So thank you very much, and I will talk to you guys later. Happy trading, and peace out.